Hi, welcome to the market view for Tuesday, the 26th of August 2014. Starting off with the 30-minute British pound, we can see that this moved high yesterday, about 40 pips by the looks of things, looking at the two grey shaded areas there. So let's just draw that in. Yeah, 41.58. We've got the grey shaded area here, and then here, of course, and between each one of these is 50 pips, so ballpark around 40, and there you go, just confirm there we've got 41, probably 42 pips there for yesterday. Bank holiday Monday, of course, in the UK, so the market fairly quiet is as expected. There was one potential trade which wasn't filled. That was sort of 3 o'clock yesterday afternoon as well, and then the market just trailing back down. And then on the overnight market, prices seem to have rallied back to the previous day's high. So let's just have a look at the 60 minutes, see what happened there. Nothing to report in the 60 minute, and then in the daily chart you can see that we've got prices there just moving sideways to higher, trading back up towards the 166 level is the first sort of resistance area, really. Let me just mark up some potential areas should the market move higher. We've got probably from this high down to this low is going to be the first sort of area where we can expect some sort of resistance, 166.23 and 166.43. so this is the resistance area should prices move back to the upside, and if they remain stuck in the sideways area and decide to reverse and move lower, then 164.64 is the downside target there for the pound. Let's just have a quick look at today's news. We've got BBA mortgage approvals. It's a medium impact news item at 9:30. Then it's off to the US for the durable goods. That's at 1:30, then 3 p.m. we've got consumer confidence. So 9:30 medium impact, 1:30 durable goods, and consumer confidence out in the US at 3 p.m. there. In the Dow yesterday, of course, this traded as normal. The FTSE was closed yesterday, but the Dow continuing to move high. You can see there yesterday up around 75 points, I think that is. Let me just check. It is 75 points, and as you probably deduce, my eyes are still not getting used to these varifocals. They're very difficult to see on the screen, but I can actually see that now. It is 75 points for yesterday. The market needing to trade above 17,133 in order to move higher. And the all-time high, of course, is 17,151. Low volume, so the market's going up on fresh air. It will be interesting to see what happens at the all-time high here on the left, in particular that the market sold off prior to this, but you can see the V-shaped correction now more or less complete there. In the implied volatility yesterday, interesting to see that the market actually moved back, and I'll just load this in for you. It should have appeared automatically, but it's not there, so just 1 second. Right, so now I've logged in, we can actually see that yesterday the market moving back up to 9.17, which is unusual because the underlying market, of course, moved higher, so this should have actually moved lower. So I was surprised when I looked at this a bit earlier on this morning. So unless this is giving us a clue that we have another correction about to happen in the markets, then there's some anomaly here, but that's what it would indicate at the moment. And of course, as we approach the recent and all-time high, there's going to be some sort of nerves in the market anyway to see whether the market will push through this, and if it does, then the implied will drop. But otherwise, the pros are marking up the put options on the basis that they're expecting another correction. So you can see this in the chart at the bottom here, that the implied they're moving higher. Right, well, that's it for the market view. It's brief and to the point this morning because yesterday was a bank holiday and not an awful lot happened, as you have seen. So let's hope and fingers crossed things start to improve as we head towards September now, and see a bit more activity as people return from their vacations. Right, that's it from me. I will see you in tomorrow's market view. As ever, thank you for your support. Very much appreciated. And as ever, thanks for watching.